Hey everybody, welcome back to Ryan Makes Sense. Today we're looking at ticker symbol VTNR. This is a viewer requested video. They do have earnings actually tomorrow. I'm recording this on the 8th, so they have earnings tomorrow. So it's interesting to see where it'll be versus when the video comes out. I do like to produce evergreen content. So if you watch this in 6 months, it's going to be relevant. If you watch this in a year, it's going to be relevant. If you watch this in maybe 2 or 3 years, you'll kind of see where I was going with my analysis. And to be clear, I haven't reviewed this one yet, but we're going to do that right now after you subscribe. Okay, so this is an oil and gas refining and marketing stock. Interesting they add the and marketing in there. I like to look at the bigger picture, but before we do that, they do have earnings coming up, so I do want to look at any gaps to the upside. And honestly, the first target we see is $3.36. If this stock is going to move up, I could see 336 being a magnet to the upside. Oh, look at this big app right here. $6 here. This guy, $7. Oh, it gets, kind of filled. $12. So it looks like, sorry, I'm just trying to make sure I'm in I think that's probably as far as the stock goes. Let's see. Okay. So this stock went from 70 cents to $17. Okay. Um, so there are some gaps to the upside. To the downside, I did not make it down this far, but I don't think I saw any during that brief period. Okay, looking at this so far, relative strength, it kind of looks like it's coming back. It's at 37. The momentum looks like it's definitely turning, but again, you got to remember this is on the monthly, so it's going to take several months. Think 6 months in advance. It's going to take a while for this to reverse. Money flow has went through the floor, through the basement, through the foundation into the center of the earth. Look at that. Who is selling? And then the relative momentum indicator, the long-term relative indicator, long-term relative momentum indicator is going down. So I think it's very safe to say we can put this one on hold, but let's continue with our analysis. Okay, wow. They jumped from $210,000 to $2.7 million. Or I'm sorry, this is $21 million to $2.7 billion. Billions with a B. Back in 2022. And in 2022, right here, the stock went from 3 to 18. So it's definitely had its move. Now it's 3 billion in 2023. So what we need to figure out is this momentum going to continue? Are they going to make 3+ billion in 2024? If that is true, this stock might be manipulated. And of course, that's I don't want to say manipulation, but there are cycles in the market. Shorts have taken advantage of this as they may have, buying on the breakdown of momentum. So, if they would have shorted from 10 to $1, that's pretty good. But when you do short, I believe you have to pay fees and stuff. So, is this short percent accurate? I don't know, but I can tell people want this stock to go down. Institutions are buying. Do we have BlackRock and Vanguard? I don't know. We're going to run my calculation here because I want to know if this is a decent price for this stock. We're going to look at cash and debt and also profitability because those also play a major part. So market cap is only 129 million, so we're not going to count it, but the sales are 3,180 million. They lose 125,250,000. So they're not profitable, but they're not losing as much as they make. It could be good. Gross margin is only 4.7%. I figured out why companies are shorting it. Okay. Every $3 billion they spend, they're making 180 million basically, which is fine, but that's a lot of freaking money. Their quick ratio is 0.52, meaning if they were to go out of business tomorrow, they would not be able to pay off not pay off all their debts, notes, liabilities, etc. So they're using all their cash to, I don't know if it's advertise or acquire customers or what, but 4.7% gross margin is horrendous. So I wonder if they were making 5 million and 21 million here and they had good gross margins, but we're just gonna we're gonna figure this out together. All right. Um, so again, every 3 billion they spend 3 billion 27 million, they get 3 billion 177 million. So they're essentially making 150 million on top, which is good. It's good, but they're spending a lot of money. Like, I mean, it's good. I actually, you know what? It's okay. Look here, 2021 before they started spending like crazy, they were making 25 million here, so 2 million here, 21 million here. And now that they've done this, they're making in 2023, well, okay, 2022 they did 264 million. 2023 143 million. And then trailing 12 months is 150 million. So they are making more money, but they're spending a lot more money, and their net income, they're getting further and further away from profitability. But again, they lose 125 million, but they make 3 billion. So I could see these as write-offs. The director sold 100,000 shares. He sold over 50% of his ownership. That's not good. Another director sold like 10%. COO purchased some. That's good. No CEO It sucks we don't see the CEO or the founder buying stock. Okay, cash quarterly, and this is USD. This is very important. They have 80 million in cash, which is not the best they've done, but also not the worst, but it's pretty low. So plus 80 million, 570,000. Total debt is 311 million, 350,000. Okay. Total assets is 952 million. Total liability 751 million. That's not even a 2-to-1 ratio. I at least like 2-to-1 ratio. If they have a hiccup, they are not going to be looking good. The riskiest quarter was probably September, third quarter of 2022. That was dangerously close. Third quarter of 2022 was dangerous. They've started to separate a little bit and a little bit and a little bit and a little bit, but um, sounds difficult. I mean, this is not going to be an accurate representation because their sales are based on them spending a shite ton of money. So we'll divide this by 84 million. So this is saying it's a $33 stock, which I know is not right. The highest target we have is $15, $14, $18. Um, yeah. So what are institutions and hedge funds doing? And again, this is a kind of a red flag. This is like an orange flag. Gross margin super low. Quick ratio, you want it to be over 1 typically, unless it's a growth or high growth company. This company's been around for a long time, and they've gone through, oh my God, since 93, and the stock used to be $7,000. So yeah, you can see this has probably done several reverse splits. VTNR. Yeah, I'm gonna say not a lot of. They are diluting shares over time. Not good. Sales are going up into the right, but at what cost? Exactly. EPS, this is ugly. Old data shows that institutions own 44%. New data shows institutions own 46%. A slight jump. Vanguard owes 5.2 million. BlackRock sold some. State Street Corp sold quite a bit. And Benjamin Coward, I think he's the founder. He sold some too. What the heck? Benjamin, what are you doing? He's the founder. What is he doing? Does he not believe in his company? I mean, historically, I mean, no, not historically speaking. We're gonna look this stock. We're gonna look and see how many times this stock has done a reverse split. Let's just do Apple. Apple has done splits, but not reverse splits. Let's see. There's a good, here it is. I'm gonna guess VTNR has done at least 4 reverse splits. VTNR. What's your guess? Do you think they've done 3 reverse splits? 5? 8? I say 4. Do they not? It did not capture it. Okay, AAPL. We're just gonna do Apple, and then we're just gonna change the URL pair. Okay. See, that worked. Oh my gosh. Okay. We're not gonna hack a website. We're just gonna change a couple things. I should just probably create an account, honestly. Okay, so we're gonna turn this off. Okay, that was easy. Okay. Oh, it says VTNR did a one stock split in 2009. If you invested $10,000 in the stock, you'd have $1,600. That's crazy. Or wait, this it's a start date of 2014. It's not going all the way back to the 90s. Oh, it's doing 10 years down here automatically. Damn, we want to go back farther than 10 years, man. Well, crud. Let's see if Google's AI thing can tell us the answer here. So it's had one. Okay. So I guess we'll take, here we go. 27-year history. That's what we want to see. We're gonna respectfully pass on this one, because it's gone from $7,000 to $1. I don't know what the CEO is selling. They have a quick ratio of 0.52, which means if they close the doors tomorrow, they're screwed. I can see why people are shorting the heck out of this. Gross margins are 4%. That's so crazy. Okay. Um, It looks like this page is done loading, but I don't see the split. So, oh, here we go. 2009, 2004. Okay, so they did the split, shot up, did the split, gone up. Okay. So, yeah, we're not gonna entertain this one, unfortunately. I think if I really, really wanted to try and time like the big spikes in the I mean, it's just ugly. Yeah. It's let's stay away from these kind of companies and let's stick with reputable ones. If you made it this far, I apologize for going down a rabbit hole, but thank you so much for watching. Consider subscribing, it really helps me out. Have a great day, and I'll see you in the next one.